Inflation is back. Last week, the jobs report came in stronger than expected. Yesterday, CPI was higher than expected. And then, of course, PPI came out today. We'll talk about that in a minute. Is the Branford renovation in trouble? We just found some major problems that are totaling up to about $8,000 in extra costs. We'll talk about that as well. I'm Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's January 12th. Let's talk about some key Connecticut market stats. Active on the market today, 3,516, same as last week. So we were flat week over week. We had 168 new listings over the last 24 hours, and we had 3,047 closings in December, 1.15 months of inventory on the shelf. Important thing is here, I think we're getting to an inflection point where we should start to see more inventory come on as we get farther from the holidays. Let's hope that plays out. December was strong economically. As I said, the jobs report last week was higher than expected. The CPI came in higher than expected on the inflation measure, and then PPI came in lower than expected. So the economy is going to keep us jumping here, which is good. The PPI is lower because hopefully that feeds into the CPI later, but we'll see how that plays out. Housing starts on the 18th, and then the PCE report, which is the Fed's favorite measure of inflation, on the 26th, are the next key dates that we really need to watch. Housing starts get at the root of the problem in the housing market. In Connecticut and across the U.S., we've built a lot fewer homes since 2007 than we had before then. At the same time, the big generations, boomers and millennials, are still active in the market. A lot of boomers are holding on to their houses or they're downsizing. Millennials are buying more houses in large numbers, and some are upsizing. So there's a lot of action and a lot of demand. One of the primary reasons the CPI was so high in December was because of housing costs, which were up 0.5%. I've beat this drum before. I'm going to beat it again. The housing market is a pure supply and demand play. As interest rates come down and these large generations are still active in the market, demand remains high. Supply is not following suit. PCE next week is the Fed's favorite measure of inflation, as I just mentioned. With the next CPI and PPI reports in December, the Fed, I think, is less likely to make any harsh or rash decisions, make any cuts. I think they're going to keep the Fed funds rate the same. The market is still predicting 6 cuts in 2024, with the first one coming in March. The Fed is saying 3 cuts, with the first one later in the year, probably mid-year. Keeping rates higher longer will keep demand down, which will keep prices down, but it does nothing to help the supply side. I heard an interesting statistic the other day. On average in Connecticut, it takes over 3 years from when a developer buys a piece of land until when they actually start building houses. And the vast majority of that time is in government approvals and lawsuits. I know of a development in East Haven that's over 15 years. I think it's like 17. So I get there's a whole bunch of things going on there. Availability of land, not in my backyard, zoning requirements. Trying to understand everything there and see, I'm wondering what can be done to make a difference. What do you think can be done? How do you think we can address this housing issue? I'd love to hear your thoughts on this. Mortgage rates, they've stayed in a pretty tight range over the last several weeks. They were up slightly this week and then came back down. The miss to the high side on the PPI CPI didn't really have much of an impact. The favorable PPI readings today, they were a surprise, but certainly they're not a big difference from what was forecasted. So I don't think these kind of middle of the road, one high, one low reports are going to make a huge difference on the mortgage rates. We'll see how that plays out. The mixed inflation reports do highlight something that a lot of people in the mortgage market are concerned about. That's the inconsistency in the inflation. I understand it goes up and down, but what they're looking for is a downward trend that they can count on. And we just haven't seen it yet. I think we need to see more than just a month or two of good inflation reports. We need to see a longer term trend and maybe even some readings around 2%, which is that Fed target, in order to see mortgage rates really start to come down. Now, for positive news, we do have to keep in mind we are about 1.4 percentage points off of the October highs for mortgage rates. So we got to keep that positive news in mind. So unexpected issues reared their ugly head at the Branford renovation. We've been talking about them for a couple weeks now. The heating system problems, they're going to cost about $4,500. Most of the work is actually already done. We also uncovered a couple other issues that are going to bring the total to about $8,000. Is this going to sink the renovation? No, it's not. And I won't go into a ton of detail, but if you're going to embark on a renovation like this, make sure you get someone to help you with the estimating the renovation costs, and also include a contingency in there. I found that 10 to 15%, some people use 20%, is a good contingency. So for example, if you're doing $50,000 renovation, you can expect 10 to 15% or $5,000 to $7,500 worth of unexpected costs that are going to rear their heads. We had a contingency budget for this renovation because we knew the house had a fire in it and it had also been sitting idle for a couple of years. We knew there were going to be some problems we just hadn't found yet. We put a pretty big contingency in place and we've kind of burned through it, but it was there. So the good news, the heat is on. The contractor has started putting trim in and has also started taping and mudding the sheetrock in the kitchen. Now that the heat's on, we'll get the temperatures equalized and we can do the hardwood floors, the kitchen, the bathroom, and everything else. So you're going to see a lot of changes very soon over the next couple weeks here. That's all I've got for today. Hope you have a great weekend. Also, I've got a new video out on buying condos in Connecticut. You can check that out on my YouTube channel. Have a great day.